Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 18th of December, 2014. Hope you've had a good trading week. Here's a look at the ES. This is the S&P E-mini front-month futures contract. We got a fairly negative reading on the CPI overnight or yesterday morning. Markets basically opened fairly flat, headed up from there. We'll show you the intraday action in a moment. The current account balance didn't surprise anybody. What do we have left for the week on Thursday? Because we got through the Fed meeting, which was no surprise. On Thursday, we've got the continuing and initial jobless claims. Those are the weekly numbers. That's an hour before the bell. We've got the Philly Fed and leading indicators 30 minutes into the market, and we've got the natural gas inventories an hour in. We've had some pretty wild swings the last 2 days. Did we end up with options unraveling, which would be unfortunate for those of us waiting for the options unraveling move? Hard to say. The volume hasn't really held up during the day, but it has been pretty good in the markets. Here's a look at the NASDAQ volume numbers on a daily chart basis, and we've had 2.1 and almost 2.2 million shares the last 2 days and 2 million the day before that. Those are pretty heavy days. I mean, if you look at it, that's way above what we've seen normally. Now, that doesn't by itself mean that there's been an options unraveling move. We'll look at that in a moment, but we've kind of been waiting for that options unraveling move because it's generally a clean move, and it's usually the best move that you get in a triple expiration week, which is what this week is. You're certainly not going to get it on Friday. However, a lot of what's been going on here has been based on the move in oil. So here's a look at oil prices. This is crude oil. Looks fairly flat this week, but there's been some wild swings on Tuesday and Wednesday in particular. Looks like it's trying to find a bottom. We're 9 bars down from a startup phase perspective. So maybe there's going to get a bounce here in oil off of the 56.42 closing price level. Hard to say. It's also a very weird time of year. If you look at the NASDAQ 100 index, usually, like I've talked about many times, you get a big run up for the year, which we had. Then you just start in the beginning of November, and you just kind of run through the end of the year. We did run through November, but we've given it all back and more here in December on the NASDAQ 100 index. And here's the S&P. We did the same there. You'll notice the 13 sell signal at the S&P with the risk line that was the exact top of the market to the tick. I mean, it doesn't get any better than that. But these last 2 days have been pretty wild, and a lot of it's been, I think, about the bottoming in oil. It's also been about the fact that the ruble and Russia and their interest rate moves have kind of disrupted the market. And this is a weird time of year for it. I mean, let's be honest, after tomorrow, which is Thursday of options expiration week in December, we're already into Hanukkah, which usually slows things down. And instead, the market has increased volume. If we get past tomorrow, we're into options expiration Friday, which should show good volume, but probably won't show a lot of movement. And then what do we have after that? We've got 2 weeks where it's about Monday and Tuesday because nobody's going to trade New Year's Eve or Christmas Eve, which is a Wednesday. Markets are closed Thursdays for New Year's Day and Christmas Day. And then, of course, who's going to trade the Friday in between New Year's Day and Christmas Day and the weekend? So it's about very limited weeks at this point in time, and volume is going to drop off. But there's obviously something going on overall in the markets. You can try to point to certain things here in the U.S. political system, the changes here, and even though some stuff got passed late in the congressional session, there are some threats about what's going to happen in the next congressional session and whether that might lead to some sort of government shutdown at some point. You can also look at the Cuba situation, which probably isn't that relevant to this in general. You can look at the Russian situation and their bump in interest rates, which may have a very dramatic impact. I mean, obviously, Russia's feeling the impact of our sanctions that we've put on and what the sanctions that have been on by Europe, and they've raised interest rates trying to protect the ruble, and it's caused a lot of U.S. companies to stop selling products, most notably Apple over there. So that's got an impact. It's a very strange time of year for all this stuff to occur because usually it's just the holiday season and leave everybody alone. So it makes it kind of a more unpredictable year, but that's what the markets are all about. There's nothing we can do about it. Having said that, Thursday, today, if we haven't already had options unraveling, we're going to be looking for it after the first hour's play because it is triple expiration in particular, and we'll see if we get anything else in general. So for this, basically reverse the prior day. We had the S&P up 40, the NDX up 75, the SOX up 14, the biotech index up almost 100. Look at that move right there. But again, it looks like it's just recovering part of the prior day's range. Google up 8 after breaking down under a massive formation under 511 or so and dropping 14 points off of that move. There's Apple. Now the VIX dropped 4, retreated very quickly. Any sort of recovery in the market, and the VIX has come back. So again, a lot of this feels like it's about oil. It's kind of an unusual situation because we don't usually trade the stock market based on oil. But I feel like we're doing a little bit of that right now at a strange time of year. So this is a very unusual environment, is what it is. So what are we looking at for Thursday? Again, we'll see what we get in terms of a gap. We've got some economic data. We've got a couple of big numbers 30 minutes in, and we'll go from there. And then after the first hour, we'll see if we get the options unraveling move. Whether or not we do, I don't know. And then we're going to wind down from there. Friday is probably going to be a bust, generally speaking. Here's the 5-minute chart of the ES. Now you'll notice, again, prior day we had gapped down. We recovered pretty strong, especially when oil looked like it was recovering, came back and closed at the lows of the session. Here we've gapped up and never came back to fill the gaps, and we actually up. If you look at it for the 2 days combined, we're up about 20 points on the S&P, which isn't a big deal. Here's the NASDAQ side. If you look at it as the 2 days combined, we're dead even. Nothing's happened over the last 2 days. We gapped down on Tuesday. We rallied up, but the rally is not as strong here on the NASDAQ side. Then the weakness at the close was much more significant. On Wednesday here, we kind of gapped up small, basically filled the gap, maybe missed it by a tick, but we basically filled the gap and rallied. We ended up closing where we were 2 days ago. So on the NASDAQ side, the net of the last 2 days is nothing. On the S&P side, the net of the last 2 days is that we did gain 20 points. But again, that's with the Fed in there. Always an awkward trading environment when the Fed's there. Most people that have a brain and don't like to churn themselves to death and blow their accounts up don't trade a ton on Fed meeting days, and that's what the last 2 days have been. So here we are. We're facing Thursday with the possible options unraveling, a triple expiration for the end of the year, and then Friday the expiration itself next week. Probably not so exciting. We'll be calling it from the Trading Lab as usual at Tradesight. If you haven't taken a trial of our services, you can. If you like our videos, please like them on YouTube, as that will help us out. Charts as usual brought to you by eSignal, and have a great trading day.